Let's talk about deferred
Yes.
compensation for high income earners and cautions to be aware of.
Yeah, when it comes to
Yes.
non-qualified deferred compensation or IRC 409A, it is so important to be aware of
Mm,
the number of cautions and red flags that occur to a number of high income earners. For over 10 years,
yes.
we've been guiding people to retire earlier, wealthier, happier with tax strategy as key. Now, one thing many people don't
Hmm.
aware of before you choose deferred compensation, if your employer allows for it, if you meet all the criteria, and if you choose to defer some of your payments in the future years, you must read also your own
Mm,
company's plan on what they call retirement timing. By that I mean, it typically is age 55 with typically 10 years of service is what
okay.
they require. Well, a lot of times executives might be 45 years old, making 500,000 a year, making
Mm,
$700,000 a year, wanting to defer the comp, but they want to retire earlier. So they say, hey, you know what? When I'm 52,
right.
I want to retire. So they start to defer their compensation out.
Hmm.
They start to have installments that happen out. However, when they get to that year when they finally want to retire at 52 or at 53, either A, they don't realize their own company said it must be age 55. And if they don't understand that, they get a nasty tax bill because in all those years of installments they had deferred out for the next 10 years because they left prior to age 55 and they didn't meet the years of service, they get a lump sum of, say, $1 million or $2 million of what they deferred all in one year
Hmm.
that's taxed high. So you want to be aware of what your own company has for that
Right.
retirement age so that if you are doing deferred compensation or you are doing installments, you're aware of what that age is and
Hmm.
how many years of service as well, so that you can be proactive with the planning. Now, if you want to do deferred compensation, even if you are 45 years
Hmm.
old, maybe you want to defer and you just understand, hey, if I go ahead and retire age 50, you understand you're going to lump sum that one year. But maybe you just deferred $400,000. So in that final year, age 50, you will get a tax hit on the $400,000, but you are aware of that.
So it's important before you choose a deferred compensation plan that you make sure
Oh,
that you're
yes.
aware of your own wealth and life alignment and impact.